KV Kamath is going to head the panel that will determine how banks restructure several corporates. Our colleague Nisha Podar caught up with the big man, and here's a slice of the chat.
I think what we expected as a worst case might not happen. Things will probably have a much, I would say, softer landing than what could have been. I want to expand on this for one more moment.
Sure.
If you look at the sectors that are in pain, there are only a few, but they're critical. We need to see that we address those through the banking system and or through other policy measures, as Cyril rightly mentioned. I think we will have to address them appropriately. But through the steps that the government already took, a large part of the pain has been or is getting elevated even as we speak. So we will be left with a few sectors which will have pain, and that pain will percolate into the banking sector. I think for that, both the government and the central bank have indicated that they are ready with the steps, and we will see how these work out. For the moment, yes, financial institutions who are lenders might require capital. The private entities are already on way to raise that capital. I'm sure in course of time, how to get the capital into other institutions will be worked out by the government. So I'm not as negative as I could have been or would have been 4 months back. Today, I think this is a doable thing.
Right, but you said that a lot needs to be seen how things pan out. RBI has already announced several steps, but KV Kamath, you're not going to be a mute spectator. You're going to head a committee on restructuring as well, and you already mentioned that some of these asset pain is going to trickle down to the financial services sector. So in your view, how is the restructuring game plan going to be different from what we have seen in the past, which is a flight from extend and pretend?
Any banker who looks at the policy that restructuring guidelines that were brought out by Reserve Bank on August the 6th, I think clearly recognizes that this is distinctly different and clearly is done with the intention to provide a helping hand. Of course, there will be sections of the economy and the sections of the banks who will want this to be available to all assets. If it were, then what you said would have happened. But I think there is a very clear intent here that this is only for those assets which are impacted by COVID. I don't want to front run what the committee is going to do. The committee will come out and within the ambit of what has been put out in the guidelines of August 6th, the committee will come out and set I would say, the criteria on which one could, or the process one could proceed. So I would not want to guess on what is going to be the outcome, but I can say this, that this time what the Reserve Bank has done is distinctly different from what they've done in the past.
Okay, well, let's move on then. The pre-open has settled and the Nifty is up by about 12 points. The mid-cap index is up 55 points. Advanced decline is good in pre-open at least, and the bank Nifty, of course, is flat. So let's see how things move. A couple of other interesting stocks. Like Sonia mentioned, some of these auto ancillaries are doing well, the smaller ones. CG Power, by the way, has started to move ever since that buying that we've seen from the Murugappa group. Ashwani, if we start here, what's the call on the index and what's your 910 stock call?
See, the index call is that if you do get some sort of dip towards 11,240, 250, which was the erstwhile 100-point range, that should be an opportunity to buy. Since dollar index is coming off, I'm still wanting to buy into metals. So Hindalco is a buy with a stop of 189, target of 203.
Hindalco is a buy for Ashwani. Sudarshan, your view on the index and your 910 call?
Well, go and buy the Nifty, keep a stop at 11,200. Mindtree is a buy with a stop at 1150 and a target of 1185.
Okay, in fact, Mindtree has been an interesting stock ever since that, when the results came, the problem was that there would be founder stake sale in a block deal. That never happened. The stock fell before that, and from 970, 980, it's been a one-way move in line with some of the other mid-cap IT stocks. Mitesh, what's your 910 call?
I would choose a buy on Coal India. Keep a stop at 133 and look for targets of around 144.
Okay, thanks for that, gentlemen. Do stay on. As always, at this hour, our colleague Nimesh would have read all the research reports that are published since morning, and he has the pick of the pack. Nimesh, good morning. Tell us.
Hi, morning, Lata. So, two things I've picked up. One is number on BERGER Paints. There was a con call yesterday from BERGER Paints, and the management commentary was very, very strong for Q2 and Q3. In fact, management expects Q2 to be, they'll turn back to positive growth, and Q3 will be aided by festive demand. So, but Nomura is more bullish on Asian Paints than BERGER Paints, purely from a valuation point of view, because BERGER is sitting at 60 times FY22, and they have a neutral rating with a target price of 540. The other stock is ADANI Ports. Jefferies has written a note today morning. They spoke to the management recently, and the management is very focused on three main aspects. First, to improve the business from the eastern ports, utilizing the cash better going forward, and focusing on rail logistics. Post the Q1, Jefferies have raised the FY21 and FY22 EPS by 13% and 19% respectively, and they've raised the target price to 415 now from 315 earlier. So these are the two stocks to watch out.
Okay, BERGER Paints and ADANI Ports.
Yeah.
So BERGER, in fact, yesterday fell despite good numbers, good commentary as well, because the problem with BERGER is its valuations. It's the most expensive stock. In fact, it trades at a higher valuation than Asian Paints. And it's a very rare case where a number 2 company has actually outperformed the number 1 company. In India, if you've seen over the last many years, the number 1 player has had the biggest market performance. But in case of BERGER, it's a unique
catching
case
up, yeah.
where it's the number 2 player which has actually outperformed the number 1 player.
It's possible that Asian Paints has gone into other things like kitchenware, and maybe the market therefore wants a pure play
Possible, yeah.
paint company. I mean, for whatever reason, we are finding this divergence. Ashwini, any of the paint companies that you like? There's Kansai as well.
Basically, these sort of paint stocks are portfolio type stocks. They don't move every day. But let's have a look at Asian Paints. Asian Paints finds big resistance at about 1920, broadly ranging between say 1400 and 1900, 1920. I don't think they are the best looking FMCG plays.
Okay. The other set of stocks are the amines stocks. I don't know if you can take a look at the charts of Balaji Amines and Alkyl Amines. I mean, it's like eye-poppingly good, both those charts. But would you all still climb on, Ashwini?
Balaji Amines is a vertical chart. I mean, if you climb on, you'll have a fairly hard fall. You need some sort of